When implementing a discounted cash flow valuation, you use expected cash flows in the future. And the most popular form of a DCF, or discounted cash flow valuation, uses free cash flows. What you can see here are the primary formulas that represent this. A firm value, it is equal to the sum of the expected future free cash flows that are available to the firm, discounted at the weighted average cost of capital. And you can also use the free cash flow to equity, again, by just summing the present values of the expected free cash flows to equity holders and discounting it at the cost of equity. So expectations are very important when we're trying to value not just stocks, but almost any asset. A company can do very poorly, but the stock price can actually be a buy as long as it exceeds very bad expectations. Seemingly, a company can do well, but actually the stock price can actually go down as long as the company doesn't meet very high expectations. So you want to understand the expectations that are built into the marketplace. Let's talk about one source of the market's expectations. Not a perfect source, but at least one source that is generally available for us to use. And that is the consensus expectations of sell-side research analysts. Let's take a look at Capital IQ, and I'm going to pull up a company called Sally Beauty. The ticker symbol is SBH. To get to the analyst expectations, I go over here on the left, and I'm going to go down to CIQ estimates. And let me zoom out a little bit. This is showing us the consensus estimates for earnings in the future for Sally Beauty. So let me put this at the top of the screen. What we see here are the fiscal years. You can see the actual results for 2018. Sally Beauty had earnings per share of $2.16. Analysts are expecting $2.22 for the fiscal year 2019. If we want more information on this, we can click and drill down on this number, and you can see that this includes the amortization of intangible assets. So you've got an assumption here, but this is basically the U.S. generally accepted accounting principles used to compute that earnings. I'm going to click on the plus sign, and we will see that there's actually a range here. There are 11 analysts that are providing estimates. The standard deviation is 4 cents. The high estimate is $2.27. The low is $2.15. And you can see estimates on lots of things, right? Revenue, EBITDA, all the way down to the gross margin here. And all these E's just refer to estimates. You can see estimates for 2020, 2021, 2022, 2023. Now, what you'll find is that as you go out in the future, these analysts are not necessarily providing much information here. So, just to look at the number of estimates, you can see here for this estimate for 2021, only 2 analysts are actually providing estimates. Only one is providing earnings estimates for 2022 and 2023. So don't take this to the bank, so to speak. Don't place a lot of faith in this. As you go from 2020 to 2021, the number of analysts providing estimates drops off tremendously here. So I wouldn't place a lot of faith on those future estimates. You can adjust this timeline to get lots of results, and so this timeline is actually very useful. The other thing that you would want to look at is you can get this in calendar years, and you can also take a look at fiscal quarters. So you can see the earnings expectations for the next fiscal quarter, which is going to end in December 2018, and that's going to be the fiscal quarter 1 for the fiscal year 2019. So you probably will find lots of information here. 11 analysts are providing information used to compute these median and mean scores. You can even look at things on a company level as well. One of the numbers I want to focus on is the LTG, which is that long-term growth rate. And you can see here that 4 analysts are providing estimates of the long-term growth rate. If you click on the I, you can get more information, and it's actually quite vague. This is the estimated average rate of earnings growth for the next 3 to 5 years. So is it 3? Is it 5? We don't really know. But what we're seeing here is that the average is almost 5%, which to me is quite surprising because I think this is a business that is increasingly under pressure as people are buying beauty supplies online. They're starting to sell them on Amazon. Retail stores are struggling to achieve growth, and that's why I feel like that these are really optimistic to say that this is going to grow at 4.73% over a number of years. I personally don't think that they're going to be able to do that, and you can check on this by taking a look at the historical results. How well have they done in the past in terms of growing earnings? And so I'm just going to take a brief look at their net income. I'm going to go over here, and you can see that net income for the last 12 months was $258 million, but it's been actually declining. If you look at it for 2015, net income was, well, let's start with 2014, 246, 235, 222, 215. It's declining as we go from 2014 to 2017, yet the long-term growth rate expected by analysts is positive 5%. So when I see something like that I don't really have a lot of faith in, I will often try and check it. I mean, does it make sense in today's economic environment? Does it make sense relative to their past performance? Have they been able to grow net income and revenues? And to me, that's sort of a check for reasonableness that we all need to make in these assumptions. So that gives you a little more information about how to get earnings expectations. I want to show you one more thing. This can be a little challenging to do within a web browser. So you can click on this Excel icon, download all estimates, and it will open an Excel sheet. Waiting. There we go. It's 4.3 megabytes, so it's a little big. But what you can see is that you've got all these earnings estimates you can download and basically access when you're not connected to the internet. It's got lots of information. It's got the guidance information, multiples, earnings surprises in terms of did they meet or beat or fail to meet earnings expectations. It's got trends in here. So take a look at this. It's a really valuable resource in trying to get all the information in one single place. Hope that helps.